Oftentimes I'll come across folks who have been recommended life insurance as an investment. Now, generally speaking, I'm not a big fan of this because life insurance is a pretty inefficient investment, at least in the beginning. Too often, life insurance as an investment is recommended by a life insurance agent who is not also an investment counselor. So they're really only recommending what they have in their inventory, not because it's necessarily the best thing for you. Too often, I'll see folks who are trying to use life insurance as an investment and they're going about doing it the wrong way. So I'm now going to share with you how do you use life insurance as an investment the proper way. Now, if you're considering using life insurance as an investment, you should have already filled up your 401ks doing the maximum contribution with the maximum match. You should also already have filled up your Roth IRAs, or maybe you're such high income that you're not even allowed to do Roth IRAs. Well, once you've already taken care of those basics, then the next step is to consider using life insurance as an investment. The number one thing you need to keep in mind when using life insurance as an investment is the more coverage you have, the more death benefits you have, the more internal expense you have. That internal expense is going to nibble away at your cash value. It's going to eat away at your returns. It's going to make it work less good or maybe even not at all as an investment. So the first thing you want to do using life insurance as an investment is you want to set the death benefit as low as possible. The second thing that you want to do is you want to put as much cash into the policy as possible. Put as much in premiums as you're able. Now, when it comes to using life insurance as an investment, back before there was a Roth IRA, you were actually able to put $9,999.99 into a $10,000 life insurance policy, and it acted a lot like a Roth IRA. Your deposits went in post-tax, your account grew year in and year out tax-free, and you could use that money tax-free at some point in the future as well. So once the money was in there, it was never taxed again. But this became a tax dodge of an unlimited amount for the wealthy, so the IRS came out with a body of tax laws to limit how quickly you can put money into a life insurance policy. If you violate those rules and you put too much money into a life insurance policy, it loses some of its tax benefits. So how you would use life insurance as an investment is you want to shrink the amount at risk, the difference between the cash value and the death benefit, as quickly as possible. And the IRS says that this shrinking can occur over no less than 7 years. So for the first 7 years, the life insurance is going to be an inefficient investment. So certainly you don't want to use life insurance as an investment if this is money you're thinking of using, well, let's say within the next 15 years even. So for the first 7 years, it's going to behave as a fairly inefficient investment. But over those 7 years, as you deposit the premiums, you can build the cash value up to almost the same level as the death benefit. This shrinks the internal costs, and now it begins to work like a Roth IRA without the limits of only being allowed to put $6,500 or $7,000 a year into a Roth IRA. So when you're using life insurance as an investment, you want to shrink that amount at risk as quickly as possible. The IRS says if you do it over 7 years, you retain all of the benefits of a life insurance policy, all of the tax favorable treatment. Now, some advisors will actually recommend that their clients will violate that and that they'll actually jump in at the level where the cash value is almost equal to the death benefit. This is called a MEC, Modified Endowment Contract. It still works, but it loses some of its tax benefits. You end up having to pay tax on the growth as it's withdrawn from the account. So when you're using life insurance as an investment, you need to decide whether or not it's appropriate first and foremost, whether or not you want to build the cash value up to the death benefit over 7 years, kind of pay your dues over that time period, if you will. Or if you would just want to jump in and mech the policy from day one and lose some of those tax benefits. So you can see that there's certainly many mistakes that can be made when using life insurance as an investment. I would be very careful and very skeptical whenever this is being recommended as an investment to you. Certainly I would suggest that you get a second opinion, and we can be a great source for that. We'd be happy to talk to you. Just give us a call.